Good afternoon, ladies and gentlemen. Last panel of the forum with unlimited time, if you look at the schedule. Okay. So we promise to honor your presence today and share with you some, great insights from John, Martin, and Julian. We exchanged some messages about how to keep this panel, lively and engage the room. So a couple of ideas came up. Number one, we should do a roll call of the bankers and the lawyers present right now who work with these three top maritime companies, so we know who is here to listen to their clients. Thank you, Suan and Julian. You're in the first seat. Very good. Okay. We should provide free coffee shots because it's been a long 2 days, or melatonin pills if you had too much coffee. So let me start by saying the following. We need to talk about sustainable profits. So assuming melatonin pills do the trick and will put you to bed tonight, what will be your dream scenario for the foreseeable future? John.
Thank you. Our dream scenario at Petredec would be continued strong U.S. production growth of LPG. I think what's driving the extraordinary market strength in our market today is a huge exportable surplus of LPG in the United States that keeps prices there cheap. High Brent price, high crude price, generally speaking, keeping Asian LPG prices relatively higher than the U.S. This creates this arbitrage, this widespread, that is the VLGC freight rate setting mechanism. And what we're seeing is that play out in terms of very strong freight and very strong netbacks out of the United States. That would be our dream scenario, and in many ways, it's playing out in this market today.
Great. So dream comes to reality. Julian.
Well, I represent Stolt-Nielsen, and although we are, I think, perceived as a shipping company, we're into logistics. We have ships, we have tank containers, and we have terminals, and everything related to bulk liquid chemicals. So if we combined all the three logistics businesses that we have, I think that a good market event, a positive event, would be a pickup in exports from China. That will obviously generate better volumes for all the three businesses, more ton miles, and also, obviously, we will generate better cash flows.
Martin.
You said sustainable profits.
Yes.
That's very different to sustainability, and they are pretty much at the opposite ends of the spectrum. In terms of in terms of positive market events, I'd actually probably look at the banks. We've seen a political swing back, particularly in the UK, in Germany, towards more oil and gas exploration and production. And if you look at the dynamic between energy security, the cost of energy, and renewables, there's been too much, there's been a swing away from the energy security over the last couple of years towards the sustainability. There needs to be a slight swing back towards the energy security by the banks. And that is in terms of their policies in funding, and this is where I do say sustainable transition plans. For now, for most of the companies who do or who are involved in the production of energy, that does mean funding oil and gas and fossil fuels to some extent. So there's been very much a divergent market between the banks in this. And it'd be refreshing to see a ratification or a reflection, point of those policies.
Okay, I'm not going to challenge John and Julian's dreams. Very good. They're close to reality. Okay, but I will ask you, is this a dream? Do you see this happening? Do you really believe that energy security will trump, if you want, all this talk about sustainability, decarbonization? It doesn't, is not mutually exclusive, okay? But we see very big European countries shutting down, okay, their green energy sectors, okay, and firing up their, coal plants for energy security purposes. Do you see that happening? Is it a dream or it will happen?
In Germany, yes. To answer that. So it is.
Yeah, but banks in Germany or banks in Europe do not finance, for example, tanker vessels.
Well, this is where it becomes, as I said, a divergent market. And I think that individual geographies within Europe, the French political policies are very, very different to those in Germany. So from certain banks, including in the US, Germany, we've seen a slight swing back of that pendulum.
Okay. All right, so we had the dream scenario. Let's talk about the nightmare, okay? What will make you jump out of bed? What is the biggest fear? What is an unexpected negative, okay, supply side, demand side event? Julian?
Recession. I mean, that's I think the short and sweet answer. Although I think recession is bad for ships, for the shipping industry in general, we believe that we have a very well diversified business focused on industrial services. So whenever the shipping business is doing not so good or bad, we have a resilient two other legs to stand on, such as the tank containers and the terminal businesses. But yeah, short and sweet, recession.
Recession. Martin?
I have small children, so I get woken up by issues such as, why is my bunny upside down, or why are the walls so straight? But the biggest issue probably actually is inflation. We look at long-term contracts and projects with, say, 4-year construction periods. Trying to price those accurately 3-4 years in advance is, or has been, very, very hard. And this isn't just us in the offshore sector. It's also in the shipping business with those with long-term time charters, and looking at the if you're the owner of those vessels, what are those operating costs? How are they affecting your revenue and your sustainable profits?
John?
I think that central banks, perhaps we've prematurely declared that we've achieved a soft landing, and that the impact of this higher interest rates have yet to permeate down to the economy and really make their impact felt. And that's something that certainly over the next 6 to 9 months, that'll be the right timeline to gauge whether we have achieved a soft landing. Recessionary fears, we can really put them on the back burner. But I think that today we're not quite there yet, and it's something that we're monitoring very closely, given that we're all ship owners. Our industry depends on GDP growth, global GDP growth, various multiples of it depending on the sector. And this impact of higher interest rates, has it flowed through to the real economy yet in a significant way or not? That's the question that needs an answer over the next 6 to 9 months.
Okay, so what will be for you, John, right now, the biggest game changer? We're talking about sustainability in growth, sustainability in profits, okay? What do you believe that, okay, it's a leading question. Let me give you my disclaimer, okay? In normalized times, shipping is doing okay. If we don't shoot ourselves on the foot and go and order, okay, a whole, new fleet from the shipyards, usually we are happy with the returns that we see. Sometimes, however, unexpected black swan events happen, and in most cases, shipping really benefits from that, whether it's a tsunami, it's a disaster, it's a grounding, it's a war, it's an epidemic, okay? So that's what I have in mind are shared that we know with the panels before. Okay, so what could be possibly a game changer that nobody sees it, or maybe, it's somewhere in the radar and it can have a very big impact on growth and profits?
God must have been a ship owner because he placed all the raw materials far from where they're needed and covered the earth, 2/3 of it in water. We all, to more or less some extent, depend on West and or Middle Eastern commodities to flow to the East. The East is the demand center, the growth engine that drives our sustainability, the sustainability of our business model. Any military conflict in this part of the world that would threaten or further strain relations between the West and the East would be a complete game changer.
Julian?
Big changes. I can think of two, one positive, one negative. Let's say one negative would be like we experienced back in 2013, 2014, 15, where a lot of private equity injected big amounts of money into the shipping industry, and that for the chemical industry, that resulted in the order book increase from 5% to 33%. So those ships are still trading nowadays, and as everybody knows, this is a supply game. It is not a demand game.
That's positive or negative?
That's negative.
Positive for the ones who own the ships now.
Just to continue with the other two panels, I think it would be the discovery of a fuel, of a sustainable fuel that we all agree on and that we all are happy with. But that's, I think, part of the issue. There are a lot of things being said, but the technology is not there yet. And our ships, for example, the way we define sustainability is to be able to trade a ship from 0 to 30 years of age. So it is up to every owner to maintain and to invest and to treat the assets correctly. And so that's another way of seeing sustainability.
Martin?
I have many, many answers to this, but I'm going to probably land on carbon tax. And the reason for that is, firstly, fuels for the ship owners. Secondly, it will actually change, it will instigate quicker change amongst fuels. But at the same time, for our business, it would instigate a business which where our clients would prefer to pay for reduction of emissions than to pay that tax. So for us, that would be one of the bigger game changers.
Very interesting. Now, I mentioned a little bit before about nuclear. During my postgraduate studies, my strategy professor was a senior advisor of EDF, Électricité de France, discussing with them their expansion plans on how many nuclear reactors they should build, for the next 30, 40, 50 years. So he gave a very interesting definition of what is strategy. And he said, strategy is what you are not going to do. If you do everything, if you spread your resources thin and try to be everything and do anything at the same time, this is not strategy. Strategy is deciding where you're going to put your resources, your people, your money, your time, and especially deciding what you are not going to do. So in planning for the next 2 to 3 years, okay, Julian, what you are not going to do?
Two answers as well. One is status quo. We believe in change. We believe that standing still is not right. and that's why we are continuing with our investments in the two other business other than shipping, which are terminals, tank containers, and we have some other businesses apart from those logistics businesses. And also in terms of bringing tonnage into the shipping industry, we will not speculate. We are a long-term ship owner. We have had experience from non-traditional ship owners in the past that have ruined the industry. So we will not speculate in terms of new buildings or adding tonnage to the industry.
Martin?
I'm going to embellish your question to what we are not able to do, which is make money off renewables.
Okay. But this is something that is by choice or by
Absolutely
default?
not.
Or by default? So I want to ask you what you could do and you don't want to do, or what you could do and you decide not to do. That's it. Renewables, you're going to go there. Okay, fine. So it's by default.
Okay. Then in that case, in the fossil fuels businesses, so in the oil and gas sectors, we will not be able to speculate on having non-full contract coverage. We don't see how the market will develop in a way which is positive to enable us to rely on residual values and redeployment of assets in 10, 15 years' time.
Very good. John?
We will not invest in any propulsion technology other than propane.
You will not invest
Will not.
other than propane.
Correct.
Taking my notes. Okay, so in this case, then I will give you the other part of the question. Okay, fortunes ahead, strategies for sustainable profit and growth. What are you going to do for the next 2 to 3 years to make sure that your shareholders are happy, your P&L looks good, okay, dividends are rising, everybody's happy? What are you going to do, John?
We are going to continue fortifying our position as the LPG value chain company globally. We're the largest VLGC ship owner with the youngest fleet. We have that's integrated with our long-standing trading platform that gives us market intelligence and commercial intel that I think is unparalleled. And then we have a very large onshore division that provides homes for the cargoes that we carry, our own homes, LPG import terminals in high growth markets in the Indian Ocean basin. We are going to double down on that position. I think that fortifying that and having our footprint be an unassailable one that can't be replicated just because you can't build an infinite amount of LPG import terminals. You can't build in today's shipyard market an infinite amount of ships. You can't assemble the team that we've assembled over many years. I think that once you have an advantage, you press it, and for us, it's total and complete focus on the LPG value chain and building out our footprint there.
Martin, you go next, only because we have the same hairstyle with Julian, so I will give him the last answer.
Understood.
Okay.
When you talk about value, I think the real value in any of our entities is to its shareholders. One of the challenges that we're facing as a listed entity, and I think most listed maritime businesses face this, is undervaluation. We need to, and the majority of those stocks are relatively illiquid, and probably us in our part of the value chain more than traditional shipping stocks. I think we need to focus on providing some form of catalyst to create that liquidity in our equity, which is quite hard to do in a long-term contract business.
Julian?
Two things a little bit. Balance sheet discipline. I think everybody knows shipping is cyclical. We have been following a strict discipline of the balance sheet since Lehman Brothers, basically, because that was the longest bad cycle in history of at least for the chemical shipping. So we have implemented a very strict discipline in terms of being able to come up with liquidity, access to sources of liquidity, have cash, have revolvers, etc. To obviously to attack every opportunity that we have in front of us, and from the operation side of things, keep investing and keep diversifying our businesses. As I said, we have terminals, tank containers, we have some other businesses. We will keep investing in those investments. We think that could be another leg, another source of liquidity for the group. Balance sheet, to have an agile balance sheet.
Thank you very much. Before we open to the floor, let me try to summarize. That's why I was typing, because I can't remember anymore all of these answers. Okay, so dream scenario for sustainable growth and profits is just big volumes of LPG exports from the US, big exports, or pickup of exports from China, and a focus on energy security more than just sustainability talk, if I may say. Nightmarish scenario, I think it's getting it wrong from the central banks, and from a soft landing, we are going to a very deep recession worldwide. I think that's what you all describe, which has big impact on the demand side of the economy. Game changers is, God forbid, a military conflict in this part of the world. Okay, a lot of money, PE money in the sector, which will completely destabilize the supply side of the equation, and carbon tax. Okay, and obviously discovery of a sustainable fuel. But hopefully that that will happen. What you are not going to do, okay? You're not going to stand still. You're not going to speculate. You're going to place orders, okay, without long-term employment cover, and you're not going to focus on anything else other than propane fuel. And finally, strategy for making the profits in the next 2-3 years, solidify market position, mitigate undervalued stocks, balance sheet discipline, and diversification. And with that, we'll open the floor for any questions. I think they're still sleeping. You good? Excellent. Thank you very much, gentlemen.
Thank you very much.
Thank you.